The IMF and World Bank at this year's spring meeting are under pressure to help Africa get back on track. The meetings come amid heightened geopolitical tensions with some African countries in dire straits when it comes to public finances. Julian Pecquet, a journalist with the African Report, is in Washington for the meetings. He joins us via our video link. Julian, appreciate your time. Thanks so much for speaking to us. Are the World Bank and IMF really under pressure to get African countries, African economies back on track?
Right. So, it's been a few years now. There's just been growing pressure on the financial architecture of the world. You've got Russia, you've got China, and you've got more and more developed countries saying this just doesn't work for us. And so, the World Bank and the IMF that are led by Western leaders are looking at different ways to sort of tackle some of these problems. That includes climate financing, that includes debt restructuring, and trying to take a lead role here in helping countries, particularly in Africa, in terms of development, in terms of funding for energy projects, electricity, even as the rest of the world is trying to shift to a green economy. And you've got more and more countries joining the BRICS group, South Africa first, but now you've got Egypt, you've got Ethiopia. So, there's just different pressure points here to sort of get these institutions that have been around since Bretton Woods in 1944 to sort of change how they're approaching things.
Now, when we look at the role of the IMF and the World Bank and various other Bretton Woods institutions that assist in financing sometimes structural adjustment programs in various countries, how many of these programs are actually successful? It almost seems like whatever the IMF or World Bank touches never is always remaining in a state of disrepair. Is it a case where the programs don't work, or the African countries or countries that are being assisted do not adhere to the various aspects?
Well, I think the answer to that is complicated and it's multifaceted, right? So you've got the programs are meant to help countries get their spending under control, but the countries have to make reforms to get the spending under control in order to get the help. And what we're seeing this week in particular is the IMF and the World Bank sort of coming out and saying that some of the big players also have a role to play here. So there's been some criticism of the U.S. this week of its its fiscal problems, sort of leading to inflation around the world. All of this huge fiscal deficit in the U.S., so stoking inflation around the world. The Chinese have also sort of come under indirect pressure here this week with the IMF reforming the way it does things and saying now they're going to have help programs for countries, notably in Africa, even before they reach agreement with all of their creditors. So until this happens, you have to have agreements with your creditors, all of them, the bilateral creditors, in order to get more help from the IMF. Now they're saying because China is seen as an impediment to some of that with Zambia, with Ghana, with other countries, now the IMF is saying, all right, we'll help you even if you're continuing to struggle with some of these bilateral debt issues. And that's an attack kind of on China. So yeah, I think the institutions here are trying to reform themselves in order to be able to help Africa in particular where it needs to be helped. We're going to find out more about what exactly is happening tomorrow. That's when they're releasing the regional outlook for sub-Saharan Africa. But we already know from earlier in the week with the World Economic Outlook that there's been a modest slowdown in emerging market and development economies in terms of how they're dealing with growth. And basically what this comes down to is that we've seen the rich world really do really well post-pandemic, even faster than expected. But the developing world is falling further behind. Inflation, cost of living expenses from the pandemic continue to really be a problem, notably in Africa. So you have this world that is moving at two different paces. And I think you're seeing the IMF, really take that seriously because they don't want to lose their credibility. And so they're coming out with all of these different ways to try to to tackle that.
So let's take a look at some of the challenges that Africa faces. So Africa is by far and large the richest continent on the planet when you talk about the level of mineral resources that are in the ground that are continually mined. And the irony of that is that it has the poorest nations. What sort of plans does the IMF or World Bank suggest or give to move Africa, which again has all these minerals, from a place where it is the poorest to be able to sustain itself from what it owns in terms of minerals?
Well, I'm really glad you brought that up because, as you may know, I think 3 weeks from now, a lot of these African countries are actually meeting in Dallas for the U.S.-Africa Business Summit. And the fact that it's in Texas is really an interesting point here because it's all about energy, right? This is the energy capital of the U.S. And to your point, I mean, you use the term richest, right? And richest continent in terms of having minerals. But having the minerals doesn't make you rich. Being able to exploit them makes you rich, right? And this is an issue that we're seeing come up again and again this week over the past several years now, where, because of the shift in the Western world to the green economy, there's political pressure on the financial system to stop funding oil and gas projects, a lot of energy, fossil fuels, et cetera. And so you're seeing that funding dry up. And that's, of course, having a huge impact in Africa, where a lot of these countries don't have the domestic capital to do, large-scale exploration, large-scale mining, drilling, et cetera. So that's one issue there. That's more on the oil and gas side. And on the mineral side, again, this is also under constant chatter here. Like, how do we finance some of these projects? How do we make sure that we can take the minerals out of the ground in places like Africa while ensuring that it's done in a sustainable way, that it's done in a way that respects human rights, labor rights, the environment, etc. So all of these are, conversations that are happening where a lot of times the African leaders and the Western leaders don't see eye to eye because, Africa, like you said, is very rich in minerals, is very rich in oil and gas, and wants to be able to exploit its resources, and doesn't like being told very understandably that, that it can't do so because the world is shifting away from some of these sources of energy. So these are all, conversations that are happening at very high level here all week.
Julian, just how much of Africa's solutions lie in African hands? I mean, we speak a lot about what the World Bank or the IMF can do. Just how much can Africa do for itself?
Well, that's a really good question. I mean, I think the rhetoric is always going to be that it's all in Africa's hands, right? And in terms of cleaning up things like public spending, corruption, etc., that you need to be able to attract private sector capital. And so that's how you're going to achieve that. So I think that the message you would hear, from the Americans, from the IMF, from the World Bank, is that a lot of this does very much depend on African leaders sort of taking a lead role here in cleaning up their economy. But the reality is that it's more complicated than that. A lot of investors here are still afraid of Africa. Maybe is not the right term exactly, but there's still a lot of reluctance to have this private sector investment. And I see that all the time covering the Biden administration, where the rhetoric is very much, we want to be engaged, we want to be in Africa, but then when it comes time to sort of get the private sector, the U.S. companies to follow suit, a lot of them aren't showing up yet. So that's going to be a continuing conversation. And I think that's going to be very much fueled by progress on the continent in terms of governance, et cetera. But, I think the media has a very large role to play here in terms of offering more positive perspectives on what's happening with the continent. So I think there are a lot of players, there are a lot of actors here. It's complex, You see the coups in places like Gabon, where obviously the pre-existing regime there for decades was not seen as particularly conducive to good governance, and yet, Western powers supported them, and in the name of stability and et cetera. And so I think a lot of these players here in Washington are coming to grips with the fact that things need to change. The U.S. approach to some of these countries needs to change. We need to see, countries in Africa really take care of their young people, create jobs, et cetera. And so a lot of moving parts. I think, to answer your question, solutions are in African hands, but they're also very much in IMF and World Bank hands in terms of helping the continent get out from a number of crises that it's currently undergoing.
So how do events like the World Bank spring meetings provide opportunities for Africa, or certainly for conversations for global stakeholders to discuss and address the development challenges facing vulnerable economies?
Yeah, well, I think that's what this is all about. It's not, I wouldn't look for top line sort of big announcements or anything like that. This is just everybody getting together and having a big conversation. I was just listening to the finance minister from South Africa, actually. He was on the Atlantic Council podcast English yesterday, talking about how South Africa is going to take over the G20, next year, but is also a member of BRICS, which is seen as sort of maybe almost antagonistic to some of these Western-led institutions with Russia and China. And he was making the point that, no, these are two separate things. And so you have a lot of actors coming here saying they still believe in the global financial architecture. They don't want to blow it up. They are looking for alternative points of engagement, so the BRICS could be a great way for certain countries across the world beyond the regional context to get together on trade and investment, but not with the idea of blowing up the existing system. But, the finance minister did make the point that, for example, the IMF and the World Bank both have had, European and U.S. leaders since the beginning, and that was an agreed-upon agreement in writing, and that all needs to change now. You need to have a different governance. You need to have a much more open system with new actors taking the lead. And so, I think you're going to have that conversation continue to grow as African leaders are heard, by coming here.
Julian, my final question, in what ways can the International Monetary Fund and the World Bank collaborate to support Africa's efforts to recover from the economic impact of the pandemic and narrow the gap with the richer nations? And I suppose part of this speaks to judging Africa based on its own scale, if you will. If we look at credit rating agencies and how they downgrade so many African countries, and the argument has always been that many of these agencies do not have an understanding of how the economics, by and large, in Africa actually work, because there are many economies that aren't formalized but are still functional. People still get paid, go to work. The GDP is continuing to grow in various nations, even though it is not standard economics, for want of a better description.
Well, absolutely. And so, the question of what the IMF and the World Bank can do regarding that is a complex one. It's not like they obviously direct the credit rating agencies, but there is an acknowledgement that you'll hear everywhere here that, with Africans borrowing at 4 times the rate of the U.S., the debt situation is only going to get worse. And so obviously they're looking very carefully at the rating. There's different points of view on this, obviously. One of them is that you don't want, a special rating for Africa, because that would just make things worse if it wasn't seen as as respectable anymore. It's seen as gaming the system. But those conversations are certainly happening right now, and absolutely, I mean, keeping the borrowing costs of the continent down and finding different ways to do that is really crucial. And like I said, earlier, looking at maybe opening up the financing for oil and gas projects again could be one way to do that. Getting more money to the continent. Right now you've got the high level of credit because of risk concerns with the continent, but then you have political decisions in the West on moving away from sort of some of the resources that Africa has, and of course that has an impact as well. So yeah, I think all of these things are very much in play. There's just a growing acknowledgement that the debt burden of Africa is unsustainable, and the G20 came out with this whole debt restructuring plan, the common framework. We're seeing Ghana struggle with it. We're seeing Zambia struggle with it. And obviously, from the point of view of the institutions here in Washington, getting Africa to deal with its debt restructuring is just, they want to see the economy not getting into debt in the first place. That's really the conversation, because right now they're constantly putting out fires, spending so much of African GDP on debt relief, on debt payments. So obviously finding ways to make sure that spending is more sustainable for the long haul is crucial here.
Julian Pecquet, journalist with the African Report. Appreciate your time. Thanks so much for speaking to us on Africa Today.